Hello everybody, welcome to Sir Chua's Accounting Lessons PH, and this is Discussion 6, Inventories Part 3, the measurement of inventories at lower of cost and net realizable value. At the end of the video, you should be able to calculate inventory net realizable value, present inventories at lower of cost and net realizable value, prepare journal entries relative to inventory write-down, and calculate cost of goods sold with the effect of inventory write-down. Before anything else, please like, share, and subscribe to Sir Chua's Accounting Lessons PH and hit the notification bell button to alert you of the latest video lessons. For all of your questions, comments, and suggestions, please put them down in the comment section below. And for webinar and speakership invites, please send me a message at kevintroy.chua1994@gmail.com. Thank you very much for your utmost support for Sir Chua's Accounting Lessons PH, and may these videos continue to help students in their online learning and academic development. May these videos continue to help teachers in enhancing their lesson plans and teaching methodologies. Okay, we're ready to start. In the last lesson, we discussed the different inventory cost flow techniques. So you learned about specific identification method, first in, first out method, weighted average method, and moving average method, and their effect in our reporting of the costs of inventories in terms of cost of goods sold and ending inventory balances. And now we are ready to learn about the lower of cost and net realizable value. Now, how do we measure inventory? According to International Accounting Standard 2, again, that's inventories, paragraph 9 specifically, inventories shall be measured at the lower of cost and net realizable value, and it's much more known to everybody as LCNRV. Okay, so it's expressly stated in the standard that inventories shall be measured at the lower of cost and net realizable value. Now, before digging deeper into this, let's first define what LCNRV is. Okay, so accountants shall apply the principle of conservatism in the measurement of inventories. Now, in applying the principle of conservatism in the measurement of inventories, what first is conservatism? Remember that conservatism is an accountant shall lean towards the less favorable outcome for the entity. We will look on the side that is not so favorable for the company, kung saan po mas dehado ang company. Kaya nga po, kapag ka-recording natin ng revenues and gains, we really wait for the actual transaction to happen, right? However, for loss and expenses, nagkakaroon tayo ng estimations, di ba? Okay? That roots from the concept of conservatism. So in applying it in the measurement of inventories, remember that we use LCNRV because an asset shall not be measured and reported at an amount higher than what is likely to be realized from sale or use. So let's say, for example, if the recorded or reported cost of inventory is 100,000, but what you will only realize in those inventory is just 80,000. You cannot report inventories at 100,000 if you think that you can only realize 80,000 from that. Okay? So, hindi tayo pwedeng mag-exceed dun sa marirealize natin. Remember that in our discussion for current assets, di ba, nakalagay dun na we can realize the asset within the normal operating cycle. Now, putting it on a perspective of measurement, yung sinasabi nating realization na yun, ay kailangan we apply conservatism. If you can only realize this amount, you cannot present it at cost na mas malaki dun sa realizable value ng inventories, and we need to be conservative on that. So we need to check our inventories depending on that certain realizable value versus the cost. Kaya po meron tayong lower of cost and net realizable value. Okay? Now, what is the net realizable value for inventories? In accounts receivable, you already know that receivables minus allowance for uncollectible accounts, those accounts that you cannot collect anymore. Okay? So, kung ano lang po talaga yung marireceive natin sa receivables, is yun lang po ang nire-report sa ating statement of financial position. It goes actually the same way for inventories, okay? Net realizable value is the difference between the estimated selling price for all of your inventories and the cost of storing or preparing the goods for sale. Okay. Well, it's actually a congratulations for a company kapag ka bumibenta sila ng maayos. That's no problem, di ba? Yun naman ang goal ng isang merchandising or manufacturing company, mabenta lahat ng inventories available for sale. However, we need to check the net realizable value of the inventory, which is we deduct any cost of storing or preparing, the cost of storing or preparation of the goods for sale versus the actual selling price. Okay? Kasi hindi naman po porke nakabenta na tayo, that's it eh. No, we also have things to consider in measurement of the NRV, no? Parang ganito. From Investopedia, pakagandang example. A retailer purchases large pieces of expensive furniture as their inventory. So, yun daw po yung inventory nila. Sila po ay seller ng furniture. And then, the company has to build a display case and hire a contractor to carefully move the furniture from the buyer's home. So, in any case that the company pays for the contractor to move the furniture dun sa bumili, and also, syempre, nagpapagawa sila ng display case, nagpapa-install sila ng mga ganon, 'di ba? In order for them to sell their inventory, these extra costs are to be subtracted from the selling price to compute for the net realizable value. Okay? So, ang nangyayari po is meron tayong mga gastos para tayo rin po ay bumenta. And those costs shall be deducted from the selling price in order for us to know how much is really realizable from those inventories. Okay? Now, meron po tayo ngayon tinatawag na inventory write-down, which roots from this comparison. Okay? If your cost is lesser than your net realizable value computed, then you shall measure inventory at cost, rooting from what is said as lower of cost and net realizable value. Kukunin nyo yung mas lower, okay? But if cost is greater than the net realizable value, or which also means that your net realizable value is lower, then you measure inventories at your net realizable value with the recognition of the decrease in inventory value. Okay? So, what happens is that nagkakaroon po tayo ng decrease in inventory value na nire-recognize natin kung sakali na mas maliit po pala yung marirealize natin kesa sa cost ng inventory. Okay? And in the application of LCNRV, remember that inventories shall be measured at LCNRV, which is being applied by individual item. Okay? Per individual item po ang pag-check po natin ng LCNRV. Okay, so let's try some problems. Actually, isa lang yung problem pero nilagyan lang ng S. Okay? So let's try some problems in order for us to properly compute for the LCNRV para nagkakaroon ng kulay yung theories na nadidiscuss natin. Okay, so for this problem, the inventory of Hallyu Company at the end of the year needs to be reviewed on its recording and measurement at LCNRV. The following information is provided to you. So we have, so as you can see, the company is selling K-pop merchandise. Specifically, these are albums. So we have Blackpink the album, BTS Map of the Soul 7, Twice More and More, and GOT7 Call My Name. Okay, so binigyan po kayo ng number of units and then the cost per unit. Pag sinabi pong cost per unit is the purchase price nung bago natin sila ibenta. Okay? And then we have the selling price and the selling cost. Okay? How much shall be reported as inventories in the statement of financial position sa ating pong period end reporting, and then we will be also be preparing the relative journal entries for them. Okay? Let's start. Okay, so our first step is to compute for the net realizable value. Ayan. Okay, so we go back to the given. Di ba po binigyan kayo ng selling price? So, the selling price for every Blackpink album is 2,428. So, saludo po ako sa mga K-pop fanatics na nakakapag-ipon ng pambili nila ng album pero walang pambili ng yellow paper. Joke lang. Okay. And then, BTS map of the soul 7, that's your selling price. And then twice more and more, and then got 7, call my name. Okay, I hope that I was able to give you a realistic selling price for these albums. Comment down below kung medyo mali si Sir Chua dyan. Okay, and then you determined or you estimated na ito po yung selling cost, no, for those albums pag nabenta. Okay, ito po yung ating selling cost. So, syempre, you just need to compute for the NRV by just deducting both of them. Okay, selling price less selling cost. Selling price less selling cost. Ganun lang po. Okay, so lalabas po yung ating net realizable value per unit. So, for the Blackpink the album, it's 1,600. For BTS, it's 882.35. For Twice, it's 1,000. And for GOT7, it's 1,250. So, what does NRV tells us? Parang ang dating is, even if mabenta mo si Blackpink the album of 2,428, kung magkakaroon ka ng cost related to selling na 828, parang ang marirealize mo lang talaga pag binenta mo siya is 1,600. Okay? Parang ganon. That is the amount realizable, the actual realization mo on that album. Diba? 1,600 lang talaga even if nabenta mo siya ng 2,428 pesos. Parang ganun po yung ating perspective. Kaya po kailangan nating i-check ang inventories ng LCNRV because baka yung ating cost na naka-record sa kanya 1,400, baka mas mababa pala yung NRV natin kahit sabihin nating mas mataas yung selling price. Okay? So, we need to take those into sincere consideration. Okay? So, if you're ready for your NRV per unit, then you can move on to the next step. Okay, so the second step is to multiply the cost per unit and the NRV per unit to the number of units. Okay, naka per unit po kasi yung atin pong information, so we need to multiply it sa number of units. Okay, so given po yung cost per unit sa inyo, you just simply multiply it to the units. Okay, so 1,400 multiplied by 500, 1,000 times 1,700, so on and so forth. Okay, so lalabas po yung total cost for Blackpink the album, 700,000. BTS Map of the Soul, 1,700,000. Twice More and More, 400,000. And GOT7 Call My Name, 2,200,000. So, kumbaga po, kung titignan natin yung inventories ng company, ito yung cost na i-report natin dapat sa balance sheet sana. Okay? Yun nga lang po kasi, kailangan nating i-check yung kanyang net realizable value. Kasi baka mas maliit pala yung value na marirealize natin kesa dun sa cost na i-record natin sa balance sheet or i-report natin sa balance sheet. Okay. So, you do the same thing for your net realizable value per unit. You multiply 1,600 to 500, 882.35 by 1,700, 1,000 times 500, and 1,250 times 2,000, you will get the net realizable value for each kind of inventory. Okay? Blackpink, BTS, Twice, and GOT7. Okay? So, when you already get your total cost and your total net realizable value, then you are ready to proceed with the next step. Okay, step 3 is select the lower amount between the cost and your net realizable value. Ito na po yung application natin ng LCNRV. Okay? Di ba nakuha po natin kanina yung total cost, kada product natin, and then yung ating pong total net realizable value also per product. Ang gagawin po natin is line per line, Blackpink, BTS, Twice, and GOT7. Kada line item na meron tayo is i-compare po natin yung total cost and total NRV, and then we will be getting the lower amount, yung mas mababa. Okay? So, 700,000 versus 800,000, the lower amount is 700,000. 1,700,000 versus 1,500,000, the lower amount is 1,500,000. 400,000 versus 500,000, your lower amount is 400,000, and 2,200,000 versus 2,500,000, the lower amount is 2,200,000. So, na-apply nyo na yung natutunan yung greater than, less than, or equal nung kinder kayo. Tama ba ako nung kinder? Okay? So, dito natin siya i-apply. Okay? So, you will just get the lower amount between the cost and the NRV. Yun po yung tinatawag nating LCNRV. Okay? pansinin nyo mabuti. Tingnan nyo. Yung BTS map of the soul, ire-report sana natin sa balance sheet ng 1,700,000. Parang ganun yung dating niya, no? Pero kung titignan nyo mabuti, ang kanya lang po palang marirealize lang pala sa atin, marirealize natin sa kanya is 1,500,000 kahit binenta natin siya ng mas mataas na price kaysa sa cost niya. Okay? So, ibig sabihin, the company or the accountant themselves needs to be conservative in recording the inventory. You cannot report an inventory worth 1,700,000 when what is only realizable in actual, 'di ba? From them is only 1,500,000. So parang medyo kailangan natin maging conservative. Doon tayo sa dehado, 1,500,000. Okay? Now the step 4 is get the total cost, the total of cost and LCNRV. So just get the total. So the total cost for the whole inventory is 5 million and then the LCNRV is 4,800,000. Okay? So with those amounts that you got, then you're ready to apply it to step 5. Okay? You compare the cost and the LCNRV. If the cost of the inventory initially, sana ganito natin siya ipe-present sa balance sheet, 5 million. However, we determined that the lower of cost and net realizable value is only 4,800,000. Thus, we need to have what we call inventory write-down of 200,000 because we cannot report the inventories at cost of 5 million because the LCNRV is 4,800,000. Okay? Ganun po. So, inventories shall be recorded and measured at 4,800,000 and syempre sa balance sheet po, ganyan na natin siya i-report. And then, magkakaroon po tayo ng inventory write-down which amounts to 200,000. Okay, now for the journal entries, paano po natin i-entry yung ating ending inventory at saka yung loss na na-compute natin na 200,000 from inventory write-down? Okay, the company has two options. The first option is directly record the ending inventory at LCNRV. So the entry would be debit inventory 4,800,000, credit profit and loss summary 4,800,000. Balikan natin. Bakit po ganito ang entry ng inventory may nasasangkot na profit and loss summary? Remember, under the periodic system of inventory, inaalis po natin yung amount ng beginning inventory by debiting profit and loss summary and crediting the amount of beginning inventory, and then we debit ending inventory and then credit it to profit or loss summary. Okay, if you would remember your merchandising accounting under the periodic system of inventory, ganun po tayo mag-record ng ending inventory. Okay, ngayon po, the first option of the company is directly record it at LCNRV. So yun na yun. 4,800,000 ang ending inventory. Yan na po ang i-report sa balance sheet. So, in your FS presentation, it's like this. The inventory amounts to 4,800,000 which corresponds po sa ating lower of cost and net realizable value. Now, the second option of the company is recording the ending inventory still at cost. Okay, walang magbabago. Cost pa din. Pero gagawa tayo ng additional entry para mag-set up ng allowance for inventory write-down. So, ano pong magiging entry? Your entry would be still recording your inventory or your ending inventory at cost of 5 million, crediting it to profit and loss summary for 5 million. However, gagawa ka po ng additional entry that would recognize the inventory write-down na 200,000, which is debit loss on inventory write-down, 200,000, and then credit allowance for inventory write-down, 200,000. Ngayon, anong itsura sa FS? Sa FS, ganun pa rin po naman talaga. Lalabas natin yung inventory 4,800,000. But in the notes to financial statements, ganito na po itsura niya. At cost, yes, it's 5 million, but we have a loss on inventory write-down which is actually reported as allowance for inventory write-down na 200,000. Kaya, ang net realizable value lang po nung ating inventory is 4,800,000. Again, ang pagpe-present po natin ng inventories is still 4,800,000. It's just that sa ating pong option 2 ay minaminus po natin yung na-set up po natin na allowance for inventory write-down. Okay? But whatever option the company will be choosing, inventory would still be reported at the LCNRV of 4,800,000. Magkaiba lang po ng procedure pero pareho lang po ang ilalabas nating amount sa Statement of Financial Position. Now assume that the company has beginning inventory amounting to 3 million and net purchases amount to 8 million. How much is the cost of goods sold? Okay, so if the ending inventory is recorded directly at LCNRV, yung ginawa po natin kanina, na diniretso natin yung recording ng ending inventory at LCNRV, this is how your cost of goods sold would look like. Your beginning inventory of 3 million and then you add your net purchases of 8 million, that is your cost of goods available for sale of 11 million. Deduct directly yung measurement natin ng inventory at LCNRV of 4,800,000, the cost of goods sold is 6,200,000. Sir, saan po mapupunta yung inventory write-down na 200,000? Ang sabi ni Valik sa libro niya, ang word na ginamit niya, naka-buried na. Buried, okay? Nandun na sa loob. It's already buried inside the cost of goods sold. So, yung 200,000 na loss on inventory write-down natin, nandito na daw sa loob nito. Sige, patunayan natin kung talagang nandun na sa loob ng 6,200,000, yung 200,000 na loss on inventory write-down, yung allowance na sinet up natin kanina. What if the entity will use an allowance account? So, ibig sabihin, your ending inventory would still be at cost but there will be an adjustment. So, ganito na siya. Your beginning inventory is 3 million and then you add your net purchases of 8 million. That is our cost of goods available for sale of 11 million, but you deduct your ending inventory still at cost of 5 million. Your cost of goods sold is 6 million. However, you need to manually re-add yung atin pong loss on inventory write-down na 200,000. Actually, it's not re-add. You need to add pala. Sorry. Okay? So, you need to add your loss on inventory write-down of 200,000 because it's being added as an adjustment to your cost of goods sold. Okay? So, your adjusted cost of goods sold that should really be reported in your financial statements is 6,200,000. So, what can you infer from that? Whether the company uses the direct method or the allowance method, the cost of goods sold is just the same. Okay? It's just that kapag ka LCNRV na nakadirekta, yung cost of goods sold mo automatic na yan. May effect na sa loob yan nung inventory write-down. Pero pag nag-allowance method ka, kailangan mong i-manual adjust yung cost of goods sold mo, adding the loss on inventory write-down to get the proper amount and adjusted amount of your cost of goods sold. But again, whether you use the direct method or the allowance method, your cost of goods sold should always be the same and your inventory should still be reported in the balance sheet at 4,800,000, which is your lower of cost and net realizable value. Okay? So, malinaw na malinaw po sana tayo dyan. Okay? So, again, please like, share, and subscribe to Sir Chua's Accounting Lessons PH and hit the notification bell button to alert you of the latest video lessons. For all of your questions, comments, and suggestions, please put them down in the comment section below. And for webinar and speakership invites, please send me a message at kevintroy.chua1994@gmail.com. Our next lesson will be about the last part of our inventories discussion, which is the inventory estimation, which includes your gross profit method and the retail inventory method. This has been Sir Chua's Accounting Lessons PH College Edition, and we are still at Intermediate Accounting Part 1. Thank you for all of your support, and we are now at 10,000 subscribers. Maraming salamat po. To God be all the glory, honor, and praise. Sa Panginoon lamang po lahat ng papuri, pagsamba, at pasasalamat magpakailanman. Thank you and have a great day. Sarangeo.